Accenture, the amazing worldwide consulting company run by the brilliant Julie Sweet, just crushed the estimates, and they raised their forecast dramatically. Their bookings were up 25%. No one was looking for anything near that. We're in the midst of a horrifying pandemic, worsening job market. But Accenture made so much money they could actually afford to buy back 3.3 million shares for $769 million at what now turns out to be terrific prices, simply because Wall Street wasn't giving its stock enough respect. The company boosted its dividend by 10% for good measure. What's not to like here? And look, Accenture is not a small company. It employs 500,000 people. It had $12.9 billion in new bookings, much larger than most of the high-flying cloud stocks in the NASDAQ, certainly more than the electric vehicle SPACs or any other SPAC for that matter. They're sitting on $8.6 billion in cash, more than many of these companies will ever make. Just ever. Margins were superb. Sweet runs a tight ship. And the company's actually benefiting from lower travel spending. It's much cheaper to win new business via Zoom right now. So in the face of it, those are the kinds of numbers you should pay up for. You can't say Accenture's fly-by-night operation. If anything, it's a hidden gem. Now, let's get to how Sweet made all of her money, because it's really important. See, we're in a moment when most businesses are desperate to digitize. They need to bring in a Salesforce or Workday to get on the cloud. Then they need cloud-oriented cybersecurity from Zscaler or Okta. Yeah, on board with ServiceNow. This stuff is hard. Do you know how to choose among Amazon Web Services or Google Cloud or Microsoft Azure for infrastructure? Most executives do not know anything about this stuff. They know their own business, and that is it. They might like their information technology people, but those people may be wedded to a hodgepodge of inefficient legacy systems. These days, that is not good enough. Sure, they could go hat in hand to Mark Benioff at Salesforce and Neil Bushry at Workday, Andy Jassy at Amazon Web Services, but it's generally not smart to spend a fortune on technology when you have no idea what the hell you're doing. So what do? They can't just throw their hands up. No, they say, let's bring in some experts. Let's bring in Accenture. If you're Halliburton, one of the largest oil service companies on earth, you call Accenture. Julie Sweet helped them digitize everything, cloud, finance, supply chain, you name it. Halliburton has no choice. As Sweet explained on the conference call, quote, every business is now a technology business, and exponential technology change is going to continue. She says that, quote, companies need to accelerate their digital transformation across their enterprises, move to the cloud, address cost pressure, build resilience and security, address their operations and customer engagement to a remote everything environment and changing expectations and find new sources of growth, end quote. In other words, if you're Halliburton, a well-run company that's struggling with a decline in exploration and production spending from its cash-strapped client base, you need to do all these things to keep your head above water. In short, you got to hire Accenture. So as much as I wanted to bash the biggest winner in the S&P 500, I came away from the Accenture conference call saying, wait a second. If anything, the stock's undervalued. Accenture's the best digital transformation play you've never heard of. I think it's a buy.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.